One artificial intelligence company just posted more than $11.5 billion in revenue for a single quarter. That is 14 times what it pulled in during the same 3 months a year ago. And it managed to turn a profit while doing it, which is exactly why it's now lining up to go public this fall. This is KnowFlo Daily. Good morning. It's Saturday, August 15th, and the money is moving fast this weekend, from a record-setting AI deal to a shakeup on Wall Street. Here's what's on the front page. Reddit is joining the S&P 500 before markets open on Monday, and investors did not wait around. Shares jumped somewhere between 11 and 17% on the news. Reddit is replacing Avalon Bay Communities, which is being taken over by another company. Here's why the pop makes sense. Index funds have to hold whatever the index holds, so JP Morgan estimates they'll need to buy roughly 16.7 million Reddit shares, almost 3 times the stock's average daily trading volume. And the business itself is on a tear, with second quarter revenue of $805 million, up 61% from a year ago, and daily users up 18%. Reddit has also been signing data licensing deals with the likes of Google and OpenAI, letting them train on its mountain of conversations, which has helped fuel all of that growth. Berkshire Hathaway is making a big bet on Google's parent company. New filings show it boosted its Alphabet stake by 83% last quarter to about 106 million shares worth nearly $38 billion. That makes Alphabet its third largest holding, behind only Apple and American Express. It was the first full quarter under new chief executive Greg Abel, though Warren Buffett says he was the one pushing the idea. Berkshire bought a net $20 billion of stock, its biggest buying spree since 2022, snapping 14 straight quarters as a net seller. It also added to Delta Airlines and a pair of home builders. And on top of all that buying, Berkshire repurchased $4.5 billion of its own shares, its highest quarterly buyback since 2021, a signal the new leadership sees value close to home too. Not all of the economic news is upbeat. The University of Michigan's Consumer Sentiment Index fell to 51 in August, down from 55.2 in July. That's a drop of about 8%, and it ended 2 straight months of gains. It also came in worse than economists had forecast. The decline showed up across the political spectrum, with the steepest slide among Republicans, older Americans, and lower-income households. People also expect prices to climb a bit faster over the coming year, and only 8% think their income will outpace inflation. For the Federal Reserve, souring moods paired with stickier inflation expectations are exactly the mix that complicates any decision on interest rates. And the AI race is going global. A Beijing startup called Z.AI, also known as Zhipu, says it will release a new model, GLM 5.3, within 2 weeks, and it plans to publish the model's weights openly. The company claims its coding scores run close to, and sometimes ahead of, the top American models, and that it even edges them out on one test of spotting security flaws in code. It says the most sensitive features will be limited to verified users. Even so, its Hong Kong shares slid as much as 9% on Friday as investors cashed in recent gains ahead of earnings. It's a reminder that the competition in AI is no longer just an American story, and that open models coming out of China are closing the gap faster than many expected. Our top story this morning takes us to the intersection of rockets and software and a price tag that stops you cold. SpaceX has completed its $60 billion acquisition of Cursor, the fast-growing AI coding startup, and the sheer size of the deal is what makes people stop. A regulatory filing shows the all-stock transaction became effective on Thursday. According to PitchBook, it's the second largest acquisition of a venture-backed company ever recorded. The only bigger one is SpaceX's own takeover of the AI lab xAI back in February, which valued that company at $250 billion. To put the number in perspective, the previous record holder, the security firm Wiz, sold to Alphabet for $32 billion, barely half of what Cursor just fetched. The two companies have been circling each other for a while. They first partnered in April, and SpaceX formally committed to buying Cursor in June, just a week after SpaceX itself went public. They've already been working closely. Cursor helped train Elon Musk's Grok models using trillions of tokens of its own data, and in return, it got access to Colossus, SpaceX's supercomputer running 200,000 NVIDIA chips. Cursor is not a small prize. The company says more than 50,000 businesses use its tools, including 64% of the Fortune 500, and NVIDIA's chief executive Jensen Huang has called it his favorite enterprise AI service. For SpaceX, the deal brings tens of thousands of new enterprise customers and a flood of developer data to make its own models smarter. It also folds one of the most popular coding tools into Musk's expanding AI empire, and it keeps a fast-growing rival out of a competitor's hands. All of it lands right as the fight over who owns the software developers use every day is heating up. And for everyone else trying to build coding tools, it's another warning shot that the biggest players can simply buy their way to scale. There's a lot more happening in business and tech this morning, so let's get into the main stories. We opened the show with that $11.5 billion number, so let's unpack it. That figure comes from internal documents seen by Bloomberg, and it's Anthropic's preliminary revenue for the second quarter. A year ago, the same 3 months brought in $787 million, so this is a 14-fold jump. It's also a sharp acceleration from the $4.7 billion the company reported just 1 quarter earlier. To give a sense of the trajectory, its revenue has been roughly doubling every few months, a pace almost unheard of at this scale. By May, its annualized revenue run rate had crossed $47 billion, driven mostly by companies using the platform for software coding and everyday business tasks. Just as important, Anthropic turned a positive adjusted operating profit for the quarter, which is unusual for a company scaling this quickly. The company has filed confidentially for a public offering and is meeting with investors ahead of a possible listing this fall, working with advisors at Morgan Stanley, Goldman Sachs, and JPMorgan Chase. For context, that puts it roughly neck and neck with its rival OpenAI, which is running above $40 billion a year, though the two may count their numbers differently. The bigger takeaway goes beyond any single company. Revenue like this is a sign that AI is shifting from hype to real, large-scale spending by corporations, and that shift has major implications for the whole tech industry. If the listing goes ahead this fall, it would be one of the most closely watched public offerings in years, and a real test of how much investors are willing to pay for a piece of the AI boom. Next, a deal that could reshape online payments. The Wall Street Journal reports that PayPal is in talks to sell itself to a group that includes Stripe and the private equity firm Advent International. Back in July, that group offered $60.50 a share, which valued PayPal at about $53 billion, but PayPal's board turned it down, arguing the offer undervalued the company. Since then, the two sides have kept talking about a higher number, and a deal could come together in the next few weeks, though there's no guarantee it happens. All of this comes as PayPal tries to turn itself around under a new chief executive, Enrique Lores, who joined in March after years at HP. His plan splits the business into 3 parts, one for checkout, one for Venmo and consumer finance, and one for payments and crypto. It also includes cutting the workforce by about 20% over the next 2 to 3 years. PayPal replaced its previous chief earlier this year after the board grew frustrated with the slow pace of the turnaround, so the pressure to deliver a win is high. It has been under pressure for a while as newer rivals chipped away at its core payments business. Investors liked what they heard, sending the shares up about 2%. Over in India, Prime Minister Narendra Modi used the country's 80th Independence Day to lay out an ambitious industrial plan. Speaking from the Red Fort in Delhi, Modi pledged that India will have at least 8 semiconductor plants up and running within the next 6 to 8 years, and that it will build 5 new nuclear reactors before the decade is out. He tied it all to a goal he keeps returning to, making India a fully developed nation by 2047. Modi framed the push around 7 pillars, including manufacturing, farming, technology, and AI, defense, infrastructure, a green economy, and what he called India's soft power, from yoga to trade. He pointed to free trade agreements the country has now signed with around 40 nations, and he leaned hard on the theme of self-reliance. India today leans heavily on imported chips for much of its electronics, so a domestic supply of 8 plants would mark a major shift. And the nuclear push is aimed squarely at powering all of that growth without leaning as hard on fossil fuels. It's also a signal to global manufacturers that India wants to compete for the kind of factories that have long clustered in East Asia. And here's one where business and sports collide. Jeff Bezos is buying into one of the biggest names in world soccer. A group, including the Amazon founder, has agreed to buy a minority stake in Liverpool Football Club, one of England's Premier League powerhouses. Fenway Sports Group, which owns Liverpool, announced the sale on Friday. The consortium, called 1892 Holdings and led by businessman Amit Bhatia, is picking up roughly 1/3 of the club in a deal that values Liverpool somewhere between $6 and $7 billion. It's the first known time Bezos has invested in a sports team. He's the main backer of a sports fund that put in more than $1 billion. And the group also includes the firm that manages the wealth of Facebook co-founder Eduardo Saverin and his wife. Bhatia will step in as vice chairman of the club, handing one of Europe's marquee teams a fresh set of very deep-pocketed backers. Liverpool is one of the most storied names in English soccer, so seeing a founder of Bezos' stature buy in says a lot about how investors now view top-flight sports teams as trophy assets. All right, time for the lightning round, where we move fast through the rest of the day's headlines. Google is retiring Google Assistant on Android phones starting September 4th and replacing it with its newer AI assistant, Gemini. The rollout will take a few weeks, and once it reaches your phone, there's no switching back to the old one. Google Home speakers, smart displays, and TVs get to keep Assistant for now, though Gemini is already showing up on most of those too. The index giant MSCI is proposing to kick out companies whose main business is really just holding assets. If the rule had applied to May's data, it would have dropped Bitcoin-heavy firms Strategy and Metaplanet from a major global index. That matters, because if it's finalized by November, the big funds that track the index could be forced to sell their shares. Some good news if you're shopping for a laptop. Apple has extended its back-to-school promotion through September 24th, almost a month longer than planned. Students and teachers in the US who buy an eligible Mac or iPad can get a free gift card worth up to $150 on top of the usual education pricing. And for the car lovers out there, McLaren just unveiled a concept called the Mach L6 GT, previewing a supercar due in 2028. The fun part, it comes with a 6-speed manual transmission, McLaren's first stick shift since the legendary F1 back in 1992. Think hydraulic steering, physical switches, and a shifter designed purely around mechanical feel. In an age of screens and automation, that's a very deliberate throwback. And in Washington, President Trump has named Will Scharf as his new White House counsel, starting September 1st. Scharf, currently the staff secretary, is the lawyer often seen at Trump's shoulder during Oval Office signings. He replaces David Warrington, who is heading to the private sector. Scharf previously worked as one of Trump's personal lawyers, so he steps into the role as a familiar and trusted face. That's the news for Saturday, August 15th. A weekend defined by big money in AI, a $60 billion deal for Cursor, Anthropic racing toward a public offering, a possible new home for PayPal, and even Jeff Bezos buying a piece of Liverpool. We'll be back tomorrow morning with a fresh rundown. That was KnowFlo Daily. Sign up for your personalized newsletter at knowflo.io. News picked for you, your local news included, free.